Hello and welcome to Degoting the Budget with Deccan Herald, brought to you by ACC and Ambuja Cement. Just days ago, Finance Minister Nirmala Sitharaman announced the Union Budget for the financial year 2025-26. To understand the impact of the announcements on the masses as well as on the economy, we have with us two renowned experts, Mr. Alok Agarwal, partner at Deloitte India, and Dr. Rumki Majumdar, economist at Deloitte India. Welcome to the show, Rumki and Alok. To begin with, Alok, I would just want to start with you. The biggest announcements in terms of the appeal among the public was regarding the direct tax cuts. If you could take us through for our audiences, what exactly were those announcements and how will they impact the wallet of the common man, of the salaried middle class person?
Of course, this was the biggest news of this budget. And while a lot has been already spoken about, let me try and get into some details on this. As we know, the non-taxable threshold, which was 7 lakh rupees until the last year, has been proposed to be enhanced to 12 lakh rupees per annum from the new financial year 25-26 onwards. What this means is basically that it's not the basic exemption limit. You need to file a return because your income may be above the basic exemption limit of 4 lakhs, which is the new slab, and I'll talk about that. You need to file a return if your income is above the basic exemption limit, but so long as your income is up to 12 lakh rupees, you can claim the rebate, which means you will have no tax liability after you claim the rebate. So that's just a minor difference between the basic exemption limit and the rebate. But the big point here is that if you're a salary taxpayer and you're getting 75,000 rupees of standard deduction, you add that to the 12 lakh rupees of rebate, and you have a person who has 12.75 lakhs of salary without any tax at all. Now, what has also been, very remarkable is you have the 30% slab kicking in only at an income level of 24 lakhs and above. Now, one would have never imagined that, at an income level of 24 lakhs, you would be having such a effective tax rate in India just until maybe last year. So that is again a very significant, and a bold move by the government. So they have simplified the slabs as well. Now you don't need to really remember which one is at a gap of 3 lakhs and 4 lakhs. It's all standard. So it's 0 to 4, so on and so forth, right up to 24 lakhs. Okay. And the other point is that the old regime remains the same. Standard deduction remains 50,000 under the old regime. And therefore, you have a significant number of taxpayers who will now start moving to the new regime, even if they were better off under the old regime until this financial year, which ends in March 2025. So that's the headlines, Arup.
We will come back to more specifics. We will speak about more specifics about how much is a person saving in terms of extra disposable income. But before that, I would like to turn to Rumki. Rumki, from a macro level, the story of the last calendar year was obviously the suppressed middle class consumption in the urban areas. So, to what extent do you think these tax measures, these tax relaxations will impact the broader economy? Because obviously, we will now have salaried personnel having more disposable income in their hands. So, is there sort of a calculation that 1 lakh crore of revenue that the government has foregone with these direct tax, with these income tax changes, that this is the X amount of impact it will have on the economy?
Over the last 2 quarters, if you have noticed, the growth has been slowing down. And if of course the reasons were different. First quarter was an election quarter, second was was heavy rainfall, so there were a lot of disruptions. So clearly that impacted the economy. But we also understand that there has been an inflation which has been persisting for a very long time. Real wages haven't grown over the last few years. Plus, employment situation remains weak because of changing dynamics, low private investments. So clearly, the middle class has been suffering in the hands of all the economic situations that has been uh, uh, going on for a long time. Now, that is why, given the fact that we need right now a consumption demand to sustain growth, because we have to accept the fact that geopolitical uncertainties are here to stay, and it might become even more difficult if policy changes in the West change. In that case, India will have to rely on its consumer demand and private investment demand. And consumer demand actually accounts for almost 61% of GDP. So the middle class who have been suffering, that segment is the biggest consumer segment, and there is clearly a need for push to that segment. And this is something which we had been asking to the government, that the segment needs some boost so that we can kickstart the consumption, which in turn will result in higher private investments, because private investors are also looking for sustained signal from consumers so that they can jump in. So I think this move was keeping in mind that we need domestic demand. There is a class which needs to spend, and very interestingly, they have given this tax incentive to the young people. They have a high income elasticity. So if their income increases by 1 rupee, then their spending increases by more than 1 rupee. So clearly, the government has taken that measure to boost consumption way more than what they are giving up.
So essentially, there is a multiplier effect, is what you're saying.
Yes, absolutely. So multiplier effect will kick in. The private investment will also come in. So the government is betting on higher consumption, higher investment, which in turn will result in a much stronger growth. So even though there is a revenue foregone, there is a possibility that higher activity will actually boost revenues from indirect taxes and higher activity in the economy.
All right. We will come back to some of the other announcements which you thought important, because I thought it was also deregulation budget, which I'll read the reasons. I'll come to those later. But Alok, so if you could just give some examples, for example, if a young salaried professional, as Rumki mentioned, because in that, that up to 12 lakh is usually the young professionals.
Yes.
So say, for example, someone who's earning 10 lakh, how much now will they save? How much more disposable income will they get in their hands? And next, someone who's earning maybe 20 lakhs. Because as you said, even till 24 lakhs, the rates have been reduced, right? So how much do you think if they can get in terms of disposable income in their hands?
So I'll go with the examples that the FM had used. Otherwise, we'll have to run through the calculations right now on this discussion. So for 12 lakhs, the calculation was that you will save 80,000 rupees of tax. But the comparison is somebody who was in the new tax regime last year and someone who's going to be in the new tax regime this year. Then for someone who's in 18 lakhs, it was 70,000 rupees. And somebody who's on 25 lakh rupees, it was 1,10,000 rupees. Now, these amounts are excluding cess and surcharge. So cess, of course, would apply to everybody. And then once you're above the 50 lakh income threshold, you also have surcharge. So, even at very high income levels, the total saving would be maximum about 1,40,000 odd rupees. But this saving, as we have seen, is a significant saving even for the middle class taxpayers, because it's virtually about 4% of your income itself, taxable income.
Okay.
And if I can, give you a little more, context here, this is actually quite remarkable, given that for a country where our per capita GDP is much lower than these non-taxable thresholds, we have a situation where these taxpayers don't have to pay any tax at all. And of course, Rumki will be able to supplement this with more, elaborate comments.
Yeah, so obviously, there are calculations that it is up to 5 or 6 times more than the per capita income, the exemption limits. And we will also talk about the other announcements like the TDS and the TCS liberalization as well as the exemption for senior citizens and others. But Rumki, what do you think were the other announcements? Because we heard a lot of things. We heard uh, that the government will look at amending some of the two of the nuclear acts to allow more private Indian private sector. We saw the announcement about deep tech and about the R&D fund, and we saw 100% FDI being allowed in the insurance sector, and there were many such announcements. But for you, which are the some two or three of the announcements apart from taxation which stood out for you, Rumki?
What we had expected is that the government should be more focused on addressing some of the challenges that India is facing currently, right? And so one was on the fact that inflation has been going up, right? I mean, it's been coming down, but it's still higher. The other is the employment situation. Given that we need employment in India because that will help in boosting consumption. The third is where we are looking at a very strong capital outflows. Now that is something which India needs to take care of, because even though we have diversified our portfolio, FDI portfolio, in terms of where it is coming in and from where it is coming in, we need to ensure that they are sustainable for capital flows into this sector, because right now we are heading towards a very capital intensive investments, be it semiconductors, be it renewable energy, and we need resources for that. So foreign investment is something that we need, and all these three issues were a big challenge. So the government did announce quite a few measures in the farm industry, agriculture, where they talked about high variety. Pulses has been one of the biggest reasons why inflation has been high. They focused on pulses. Then coming to the employment, they've supported the MSME. They have given a lot of incentives for startups. Given the fact that over the last 1 year or 2 years, we have seen that the data by the Periodic Labor Force Survey, PLFS data, the share of self-employed people has been going up. So it's becoming very evident that there is a startup and entrepreneurial culture which is kind of which is picking up, and that needs to be supported. So the government has done that through for funds and through so many of the other incentives. And finally, that about the foreign investments, as you said, insurance sector. They kind of they made 100% FDI inflows there, of course, with certain clauses, and also they extended the sovereign wealth fund and pension funds tax exempted for spending for investing in infrastructure for another 5 years. So they are giving a lot of measures to address the challenges that India has been facing, because we right now need demand drivers over, so that helps us deal with the uncertainties. And I think that's something which the government is trying to push for.
All right. Alok, some of the other direct tax announcements, which is the TDS and TCS relaxation, how important do you think they are for the salaried classes, the middle classes? How will they benefit the common person?
So Arup, actually, before that, I'll come to one more important change, specifically if we are looking at middle class taxpayers, which is the relaxation in the context of the second house property, which is not rented out. This was a pain point for many taxpayers with a second home. And just to give you some background, under the existing tax law, you are allowed to treat the second home as a self-occupied property, which means there is no notional rent which you need to offer to tax. Only if you're not able to occupy this second home for the reasons of employment or business. Now, this was a bit of a nuisance to many individuals, because they may have had a second home which they are not renting out, but for other reasons, not for the specific relaxations that was there in the tax law. So now the government has done away with this relaxation. Done away with this restriction, and this relaxation of two houses being treated as self-occupied, which means you don't have to offer a notional rent, is applicable regardless of any conditions at all. And this is applicable for the current financial year itself. So from the financial year 24-25 itself, unlike most of the other provisions which are applicable from the next financial year. The other point to note is that the second home can also be outside India. So there is no restriction about this home being located in India.
Mhm.
Unlike some of the other provisions in the context of capital gains tax exemption,
Mhm.
where the government had given the relaxation for the home only if it is located in India. Now, coming to two important changes on TDS and TCS respectively.
Mhm.
On TDS, one important change is to increase the threshold for senior citizens,
Mhm.
where there should be no TDS by the bank on interest paid up to 1 lakh rupees.
Mhm. Mhm.
So this was 50,000, and now this will provide more relief in terms of unnecessary TDS
Mhm.
and have the need to claim a tax refund in the return for senior citizens.
Mhm.
So this is a welcome relief because most of these senior citizens, especially in the context of the higher slabs now, will not have any tax liability at all. So it doesn't make sense for them to suffer a TDS.
Mhm. Okay.
Now on TCS, two changes. One is the 7 lakh threshold has been increased to 10 lakhs,
Mhm.
which is again, welcome move because it saves the nuisance value of suffering TCS and then again having to adjust that in your advance tax in your TDS.
Mhm.
And also keeping track of it because if you don't keep track of it again you'll have to claim a refund in your tax return which impacts your cash flow.
Mhm.
As far as the other change in TCS is concerned, they have removed the 0.5% TCS applicable
Mhm.
on remittances for educational purposes outside India,
Mhm.
provided that amount was funded by way of a loan from, let's say, a banking institution in India.
All right. All right.
So if you are remitting for educational purposes without borrowing, then that relaxation does not apply. But if it is, then there is no TCS at all.
All right, all right. And so obviously for people with second homes and people who are taking education loans, all of these issues which you mentioned, they will be beneficial for the people who are into this. All right. Rumki, this is a two-part question. Number one, in terms of the budget balance, in terms of how they adjusted the revenues with the expenditure, because they are foregoing a lot of revenue because of these measures. How did you like the budget? And second, were there any misses? Because my view is maybe some more on PLI, production linked incentives could have been announced. But your views, how did you like the budget balance? And number two, were there any misses which you thought that she could have mentioned in the budget?
Right. So, around the budget balance, I think this year they will definitely meet the target.
Mhm.
They have anyways lower expenses because of the capex that they kind of all fell short of because of the first 6 months,
Mhm.
and revenue has been good, so they will definitely meet the target this year.
Mhm.
Next year could be a challenge. I think where the government is betting on is that if the revenue that they're foregoing because of the income tax, this will come back as a higher activity and higher GST and higher indirect tax collections.
Mhm.
So they're betting on that.
Mhm.
But what I would say is the government will be very careful in or sticking to their targets, because fiscal deficit is a indicator which every global investor look at.
Mhm.
Because when they invest in the country, they would like to have their money safe.
Mhm.
And fiscal deficit is an indicator that gives that confidence that the government can manage its finances.
Mhm.
So I think, and if you look at all the peer countries, be it Vietnam, Thailand, who we are competing with today, they have all lower fiscal deficit. They have 2.5%, 3.5%. We are at 4.5% next year. So clearly we need to consolidate our expenses, and that's something which the government will continue. So it will probably a more of a mandate than a choice here. Second question about PLI, I think they didn't call the PLI as a PLI, but they did announce quite a few around manufacturing. If you look at quite a few MSME announcements, quite a few like toy, food processing, leather and footwear, all these small industries where they can boost employment because they are very labor intensive industries. So they did and have quite a few announcements around manufacturing. They didn't call it as a PLI, but I think what we need to also understand that the government doesn't just wait for the budget for big announcements. They can actually make many of these announcements even outside of budget, and even PLI was an announcement out of budget. So they probably have quite a few announcements coming up through the year. But yeah, they didn't call this PLI, but they had quite a few manufacturing. In fact, this the whole exemptions on cobalt and lithium, so that they can manufacture the batteries, EV batteries in India. Those are sort of incentives that the government is doing to boost manufacturing within India in at least key sectors which can help India to be at least self-reliant or at least help in employment. So there were quite a few measures there.
All right, all right. So thank you, Rumki and Alok, for your insights and your views on the budget. And to our audiences, uh, it was a well-received budget from what we have heard so far. What impact it will have on your budgets, on your own pockets, and on the economy, only time will tell. Thank you for watching.